what are you expecting from the Fed next week? And more importantly, what is the trajectory that we can expect if in case there is a rate hike that comes through?
I think that probably all the ingredients have been put in place for the Fed to hike interest rate next week. I think that it has been largely priced in by the market at this stage. What is probably more important is what will be the communication around the likely move from the Fed. So all the terms, all the words which will be used in the statement will be very much scrutinized by the market. So I think that afterwards, the main issue, the main question will be how fast the Fed is going to tighten its policy over the coming 12 months. And I think it's probably the main question mark for the market at this stage.
Xavier, hi, good morning. So the other big question is what happens to the emerging markets and emerging market currencies? Do you think we are in the process of a bit of a bottom formation for emerging markets?
Probably, I think that we would expect some emerging markets currencies to bottom out in the aftermath of the Fed hike after the publication of the statement. So, but all emerging markets that not necessarily in the same situation. So, for instance, you have India, which is probably the best equipped countries among emerging markets, able to withstand the Fed hike and the Fed tightening cycle. But on the other side, we have Brazil, which is still facing, lots of headwinds from the political gridlock, from the big current account deficit. So I think that also oil and commodity exporters will continue to feel the pain of, first of all, of the commodity price further drop, and also which will be compounded by the Fed hike.
Okay. Well, you did talk about India's resilience, Xavier. So I'm going to ask you about what your position would be towards the Indian markets. Would you look to possibly increase your allocation?
We have adopted, a positive, an overweight allocation onto the Indian equity market. We tend to be slightly more cautious at the current moment because of the Fed hike, which is coming up, because of the capital outflows coming out of the emerging market. But we are keen to keep, positive and allocation at this stage. And I think that we are not reducing allocation. So we probably will take the opportunity in the coming weeks to continue to build up exposure to the Indian market.
Okay, where would India be in your pecking order, Xavier, in terms of emerging markets?
I think that it's probably our preferred market among emerging ones. From a global allocation perspective, so we have reduced our allocation onto emerging market because of the Fed hike, because of the structural economic deceleration. I think that really India stands out. In terms of macro perspective, we still expect growth to be on the strong side in India. I think that India is probably one of the few emerging markets which is likely to see some kind of growth acceleration both in 2016 and 2017. So I think India is a very specific case within the emerging market backdrop.
Okay. Xavier, what is your sense in what's happening on the commodity cycle? You did refer to that fleetingly, but we still have iron ore prices which are at multi-year lows. Brent as well as WTI crude are now sub $40 per barrel. Your sense in terms of when the commodity cycle is expected to bottom out, or do you think that 2016 might even be worse?
We do not expect the things to get from bad to worse in 2016. I think that 2016, broadly speaking, will be probably the year of commodity prices bottoming out. But not all commodity prices are going to experience probably the same bounce back. I think that in our view, $40 is probably, for the Brent, is probably some kind of floor for oil prices. So we do expect across 2016 a gradual price pickup for the Brent. I will be probably a bit more bearish about hard metals. When you look at iron ore when you look at steel, when you look at aluminium, you still see, you know, some overcapacity, especially in China. So I think that overall outlook remains a little bit bearish for hard metals. And we tend to be probably slightly more optimistic about soft commodities. I think that we are probably very close to a bottom for soft commodities because demand is there, demand will continue to grow. And I think that with oil prices bottoming out, probably soft commodities are probably less risk to go further down at the current moment.
Okay, fair enough, Xavier. We're going to leave it on that note. Thanks very much for joining in and taking us through all your views. So